Hey everyone, and welcome to Crypto in a Week. Alright, we'll try to make a cooler opening for the future. This is a new weekly video update segment that we're trying to add to give you guys an overview of what happened during the week in the crypto space, in case you're not keeping up with the news on a day-to-day basis. Although, if you do want a brief recap of what happened every single day, then you can also check out our new blog segment called Crypto in a Minute. You can find that here, go to our blog, and there's Crypto in a Minute. As we've also just started this, we only got 3 days in here this week, but in the future it'll be more or less a daily update, maybe skipping some here and there. And the weekly video, Crypto in a Week, will also be posted here every Friday. So without further ado, let's jump in to what happened in crypto this week. Now, I'm sure you hardly need me to tell you that the markets are down this week. We can take a quick look at Bitcoin and see what's been going on its chart. Yeah, it's not looking super exciting. A lot of indications are showing that this might be a prolonged bear market, but you never really know. As you can see, back in May, we had that first dip that went sideways for a while, and now this last week or so, it's been going down more. So hopefully from here we get some more sideways action, but different analysts say it might go down even further before we start going sideways and just keeping this bear market. But if you really believe in crypto, especially the big ones like Bitcoin, then the future still looks bright. And as I'll talk about later on, there are reasons to favor a bear market sometimes when it comes to innovation and real solid projects building what they want to build to actually make the crypto space become more usable, more functional, and more beneficial to everyone. A major part of what's going on is broader economic concerns, making people feel a sense of instability and wanting to pull out of riskier asset classes. Part of this is inflation, which can be a good thing for crypto, especially Bitcoin. I'm sure that you've heard the Bitcoin as a hedge against inflation narrative, which I think overall how Bitcoin works, if it were to be more widely adopted, is definitely true. But where Bitcoin stands right now, it's still very speculative, and it still, as we've seen recently, has huge fluctuations in price. So in the long term, if you believe in Bitcoin, then yes, it's probably a good hedge against inflation. But if you're looking at short to medium term, it's much harder to predict. If we were only experiencing inflation, but people generally had a more positive outlook of the economic situation worldwide, then maybe we'd be seeing a big growth in Bitcoin cryptocurrency. But with the fear of a large global recession on the horizon, it's not having the same effect as inflation in good economic conditions might have. So we can also see this reflected in the stock market and the S&P 500. A little funny tidbit is on Monday, if you looked at the S&P 500, the only company that was positive and not negative was McDonald's. So perhaps that was some of us crypto bros getting that backup McDonald's job when our bags deflated. Another major concern in the crypto space this week was the Fed Open Market Committee meeting. And people thought that maybe they would spike interest rates as much as 75 basis points. And other people said, no way, it'll only be 50. In the end, it was 75, which brought us to a range of 1.5% to 1.75%, which is the largest rate hike for a single meeting dating back to 1994. And getting to more crypto-specific topics, there are some things causing fear directly in the crypto space, starting with Celsius and Three Arrows. So Celsius essentially provides a service promising high returns on your crypto. They do this by participating in a diverse portfolio of other crypto services, especially within DeFi, that give high returns. Their idea is that if they diversify within this, then they'll manage the risk a little bit, but make sure everything gives them higher returns than they're paying to their customers so that they can give the returns safely to their customers. However, in events like we're seeing recently, when everything's going down real quick, then that can cause problems. This also brings up a major point of consideration when you're involved in crypto. There's the old saying, not your keys, not your crypto. So even though there are many services that can give you convenience or better returns for letting them manage your crypto assets, remember that once you do that, you're no longer in full control of them. That being said, these services aren't necessarily bad. It's just important to make sure that you know how it works and that you trust them. And furthermore, this is no particular judgment on Celsius. I don't actually know that much about them, and hopefully they'll solve their issues and be able to unfreeze withdrawals. In similar news, the hedge fund Three Arrows Capital is rumored to be facing insolvency. It's been reported that Three Arrows had long margin calls on different cryptocurrencies, and some of their positions have been liquidated. So far, they've kept rather silent, so we don't really have any official updates from them, and it's something to keep an eye on. But both of these also tie in somewhat to stETH, or staked Ethereum, which is essentially a token that is supposed to be tied one-to-one with Ethereum, but it allows you to participate in Ethereum staking without having the minimum amount of Ethereum needed to do staking actually directly on Ethereum. The major problem here is that in recent days, stETH has become depegged from Ethereum and is trading at a lower price than real Ethereum, which has people using stETH quite concerned. The major concern here is another Luna type event where it becomes totally depegged and the value just plummets into nothing. So far, the depeg is not that major, but it's another thing to keep an eye on that we don't have a conclusion to just yet. As always, even if most analysts have a view of a prolonged bear market, there's always some making predictions that everything's going to turn around very soon. One of the recent ones that happened this week was the 200-week moving average being a support line for Bitcoin. Right now, we're still below that 200-week moving average, and it seems like we're going to close the week that way, so this may not be a big turnaround event that people were hoping for. Another thing that was making headlines all over the news in the crypto space this week was Bill Gates' comments on cryptocurrency, calling all cryptos based on greater fool's theory, where you buy something and the only way you make money is assuming that there's a greater fool who will buy it at an even higher price from you. I actually made a short video about that earlier this week if you feel like checking it out. But essentially, as smart as Bill Gates may be, it seems clear that he hasn't really seriously looked into crypto or Bitcoin to really understand it. As if he did, I think he would probably have a better understanding and maybe be able to explain himself better. When you're somebody like Bill Gates, I think it's very easy to dismiss the entire crypto space as your expertise and knowledge base lies elsewhere, and it's easier to just dismiss the whole thing as it already comes with stigma, rather than trying to learn more about it and give a more valuable critique. So essentially, Bill Gates blasting crypto is good for those headlines, but it doesn't really count for much for people who are really into the crypto space. There are plenty of more valid, well thought out critiques for the crypto space and even for Bitcoin. So if you're wanting to dive into a deeper critique, better to look elsewhere than somebody who's just calling it based on greater fool's theory with no further explanation. It really doesn't do much other than create some nice clickbait. And in other celebrity and crypto news, there is a lawsuit that's been put out against Elon Musk for promoting Dogecoin. Now, many of us may also feel the same way, that he shouldn't have been promoting Dogecoin so much, and it was a bit of a sketchy thing to do for the richest man in the world. That being said, I'm not sure this lawsuit against him holds a lot of water. He's currently being accused of running a pyramid scheme to support Dogecoin and being sued for $258 billion, which is a lot of money. The complaint claims that defendants were aware since 2019 that Dogecoin had no value, yet promoted Dogecoin to profit from its trading. Musk used his pedestal as the world's richest man to operate and manipulate the Dogecoin pyramid scheme for profit, exposure, and amusement. I do think the amusement point can definitely be verified. The exposure point also holds a lot of water. For profit, I'm not sure he actually profited off of the Dogecoin, but that's also hard to say. There's no comments so far on the specific evidence that supports Dogecoin being worthless or Elon Musk running a pyramid scheme. The plaintiff also wants to block Musk and his companies from promoting Dogecoin. That's reasonable. And he wants a judge to declare that trading Dogecoin is gambling under federal and New York law. That would be a huge change in how it's viewed currently. So it's not really surprising to see some legal backlash against Musk for his Dogecoin promoting. But as far as this actual suit goes, I'm not sure it really holds much water, but it might get something out of Musk. Who knows? This is another thing that's recent, and we don't have many updates on it so far, but much like the Bill Gates quote, it does make good headlines. And finally in the news, we've been seeing a lot about MicroStrategy and Michael Saylor with a Bitcoin margin call coming up. There's been a lot of hype about the margin call, thinking that it's going to ruin his entire company and they're going to have to liquidate all of their Bitcoin holdings. However, Michael Saylor has responded and said that there's really no threat at all currently. He called it, in fact, much ado about nothing. Saylor went on to explain that there is only a $200 million loan that they need to collateralize, which they can apparently do easily, as currently they are more than 10 times over collateralized. And finally, he said that his company's balance sheet has been structured so that it can deal with extreme volatility more or less comfortably. And to end this update, I want to mention that even though there's a lot of indications that this bear market may be extended over a longer time than most of us hope, but if you zoom out and take a more long-term view, as long as crypto doesn't die out, which basically means as long as Bitcoin doesn't die out, which I personally think is a very unlikely event, then the bear market can be a great time for innovation and true useful developments that will help crypto become more valuable to everybody using it. This is something we've seen happen in past bear markets, so there's no reason to think that it won't happen again. So now's a good time to keep an eye out, learn more, and just weather the storm, I guess. Anyway, that's it for this week's Crypto in a Week. Hope you enjoyed the update, and I'll see you again next Friday. Thanks for watching.